Hey listeners, I just spoke with Anna Yuan, founder of Perenna. We talked about the topic on everyone in crypto's mind lately: digital asset treasury companies, or DATs. These publicly traded vehicles for getting exposure to crypto are all the rage on Wall Street, but Solana is largely getting left out of the fun. Solana's largest DAT is the 10th largest overall, and it's smaller than the fourth biggest Ethereum DAT. Anna, who spent time at Consensus and later at the Solana Foundation as stablecoins lead before founding Perenna, talked with me about why Solana DATs are falling flat, who the possible Michael Saylor of Solana could be, and her vision for what Solana DATs can do differently to keep up in the crypto stock frenzy. Let's get into it. This episode is brought to you by Katana, a DeFi-first chain built for deep liquidity and high yield. You'll be hearing more from them later in the show. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubinek, joined today by Anna, the founder of Perenna and a more than DAT advocate. We're hoping to chat a little bit about the DAT landscape today and what one of these digital asset treasury companies could look like on Solana. Pretty stoked for this conversation. Anna, thanks so much for joining Lightspeed.
Thank you so much for having me.
So I guess let's just lay the land a little bit to start out. So I was perusing the Blockworks DAT dashboard today. It's a good one. Shameless plug. Check it out. And, this summer, the hottest trade in the crypto world has been buying these digital asset treasury companies. If you talk to liquid fund people, bankers who do crypto stuff, this is just a lot of what their job is right now, is the idea that you can take a publicly traded company, announce that you're going to buy a bunch of crypto, and the market will value the crypto at a higher level than its NAV. Of the top 10 digital asset treasury companies, or DATs, the 5 of them hold Bitcoin, and the 10,000 pound gorilla here is obviously MicroStrategy still. 4 of them hold ETH, and 1 holds Sol. But the largest Solana DAT is the 10th largest overall, I think, based on NAV, or market cap. But that basically means, right, that the 5th largest Bitcoin DAT or the 4th largest Ethereum DAT is bigger than the biggest Solana one. So that's a pretty big kind of catch-up position that Solana is in. So just with that general lay of the land, Anna, I'm going to start by asking, why are Solana DATs not seeing more success on Wall Street, in your view?
I think a couple of reasons. So first, in terms of TradFi instrument demand, investors see Solana as BTC, ETH, Sol, which I think is still great because if you look at market cap wise, Sol is not the third. The second reason being that Solana as an ecosystem is a bit younger. So we don't actually have a lot of Wall Street veterans who join the Solana ecosystem. And therefore, in terms of candidates who can form teams to build a viable DAT, that number of potential people is really small. Now, I think that is going to change with some of the more TradFi veterans that are not Solana native or not Solana OG coming in and wanting to invest in the ecosystem in a way that's similar to early days Consensus. Like Consensus to me, and I was at Consensus in 2018 briefly, to me, that was the home of talent magnet. And a bunch of people from New York put their TradFi jobs, joined Consensus, 5-7 years later, decided to come out to do DATs. So some of the biggest DATs came from that. Solana simply didn't have it. And then the third point is why I was advocating and wrote that article, Sol needs more than that, and shared it with the foundation leadership as well, is because I think this is actually, at first, a lot of people in the ecosystem saw it as not like anti-crypto idealism, but a bit too capitalist, and sort of intuitively rejected the construct as beneficial to the ecosystem. However, I think it's a game. It's a tool we have to have as an ecosystem, and a game we cannot lose. Because if used correctly, it can be highly beneficial to DeFi and to funding developers, funding teams, and the access to capital is extremely important.
And it's maybe helpful here to note, like you previously led stablecoins at the Solana Foundation. Is that right?
Yeah. So I was at Labs then Foundation for about 2.5 years. Um, Worked on mostly I led stablecoins, but also did some international growth. It was funny because I proposed I wanted to be the stablecoin lead like the week of FTX collapse. So then I got in touch with, I was like mostly the POC for a bunch of exchanges and market makers. And I saw how expensive capital can be. And also that in 2023, most of these like market makers and centralized exchanges did not support Solana as an asset, or so oftentimes they supported Solana as an asset, but majority of them did not support Solana stablecoins. So if we didn't have that, liquidity didn't flow into Solana. And early on, I knew the importance of having access to liquidity, especially institutional level liquidity. And where is instill liquidity? Majority of which is in traditional rails, and that's equities, equities and fixed income and all the things that are off chain. So I think idealistically, although we would like everything to be on chain, that transition is proving to be a lot longer. So instead of saying like, hey, wait for people to bring capital on chain at a slower speed than we would like, why don't we go play on their playing field in a way that they can understand and funnel capital in through the DAT vehicles or through like funds, traditional structures, that majority of the investors can buy. Because when you look at like pension funds, hedge funds, that's the majority of the asset managers of the world. And those people cannot self custody crypto. They don't know how to, they don't want to. So then you have to go through one of these centralizing vectors.
And would you say that, like, you mentioned you were at consensus and sort of that consensus funnel has created kind of the pipeline to make a lot of these Ethereum DATs. Do you think that that just makes Ethereum structurally, you know, more ready to succeed in the DAT world? Like, was Solana always going to be sort of disadvantaged? And if you have a thought, I think it's interesting why XRP isn't in this conversation as well, right? That's the third largest crypto. And nobody talks about XRP DATs, although maybe Ripple itself is the DAT, but I don't know why. Yeah, I guess bring those points into the conversation too.
Let's talk about the XRP one. I was really surprised that I saw, I think Litecoin has one. Doge attempted or has one. I thought there's no way that Cardano and XRP, like those really OG crypto teams, wouldn't go for one. Potentially, it's that I would say it's a miss for them, regardless. But it could be that they were trying to take XRP, like Ripple Labs, public. It could be that they already have decent liquidity on on like non crypto native venues. So think the Robinhood, the like traditional brokerages that offer crypto, the PayPal's of the world. Regardless, I think them not doing this, from my view, is they missed out on it. Um, Solana front, okay. I think ETH made an amazing comeback this year, to the extent I maybe feel a little bit stressed out for our ecosystem, because Ethereum has long been the chain, the ledger for accounting for assets. And objectively, if you look at quantity in dollars issued on Ethereum, it is much larger than Solana. So from an ecosystem point of view, Solana's long been arguing like, oh, we have we have higher velocity, we have more apps, we have more users, all that. But if you don't have the asset base, like institutions cannot underwrite that, because like cynically, you can have a lot of bot activity. Many other chains have lots of bot activity, and that doesn't mean that that chain is going to survive and has PMF 5, 10 years from now. So in order for, I think Sol is at a point where it's reached the tipping point of it will be here. It has Lindy effect. I don't think it's reached a point of it has found product market fit. And it oftentimes, like we as Solana native, we might think that Solana is here to stay. It's like super bullish. We see everything happening. From institutions' perspectives, they don't see it that way. They see Solana as younger, similar to ETH, maybe fast and cheap, but so is everything else now coming out fast and cheap. And we haven't proven ourselves yet. So I guess that was a very long-winded way of saying it's it's almost like a precarious position. But I think if positioned well, Solana for the rest of 2025 and also early 2026, we have like a huge comeback to make, which I mentioned in the DAT article, and we can talk more about that.
Incubated by Polygon and GSR, Katana is something different, a purpose-built DeFi chain that's focused on giving the best experience possible. It does this by sustainably generating deep liquidity and sustainable, real yield. Katana is built from the ground up, with DeFi mechanics to keep your bags from just sitting idle. All you need to do is use your favorite protocol, and Katana mechanisms do the rest of the work for you. Katana is launching with a notable ecosystem of primitives, assets, and partners including Morpho, Sushi, Lombard, Chainlink, and Yearn. Katana is a DeFi-first chain, built for deep liquidity and real yield, by redirecting chain revenue back to active DeFi users. The 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click, and start earning immediately on your ETH, BTC, USD, and more. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Well, yeah, because there's all these kind of structural disadvantages that Solana has. It's obviously way behind in the DAT game to the extent that the DAT game is something that it should be playing. What does Solana need to do? What's the solution to this?
Yeah. I think first and foremost, be very aware of it and come with an open mind. I was talking to some of my former colleagues about this, and I think people's understanding about like 3-4 weeks ago was not as high as I expected. They kind of, not to say anything bad about them, but like people were thinking, okay, we already have a very strong base, like everything's super bullish for us. Why do we need to go into this crowded, messy, almost like dirty capitalism game? But I think the way you view it and the landscape changed so dramatically. In the early, like Strategy was the one that pioneered this trade. They created the trade. In the early days of ETH and even like Sol DATs, it was just buy and hold because institutions did not want to stake it. But the key difference, I think, is ETH and Sol and a lot of these assets are not like Bitcoin. You have to use them. And the Main Street, Wall Street investor awareness, as much as they feel uncomfortable staking because they don't understand what is happening, or even like liquid staking, sure, there's actually some level of risk to it. Everybody is doing that in order to compete. So you see all these DATs like going in this direction. I think where Solana can win Solana, a good outcome for Sol DATs is we have a hub and spoke and eventually like a more decentralized end game of Solana ecosystem companies that are for profit or of various structures across the around the world at various markets. So for example, you have one that's in like, let's say one in Japan, one in like India, one in UAE, one in Europe, a couple in US, like all around the world. They're tapping into the local capital markets. They kind of serve as regional Solana labs or foundation, and they all have a mandate to grow the ecosystem. Like from a foundation's perspective, I think you can't ask for a better grantee. Like all foundations give grants. Most of the time you give grants and you're worried like, will they like get rid of the asset or the grant we give them and then move on to go to another ecosystem? Like that's a legitimate concern. Now you're having these public companies with mandates that they almost cannot change, or at least cannot change on a whim. So they're highly, highly aligned with the ecosystem, and they help decentralize it. So if done correctly, I think it's a decentralizing force. And you kind of want, let's say, more than 3, less than 10 around the world that can achieve $1 billion over 2% or 3% supply holding. But what you don't want is, you don't want a single one. Again, we're not Bitcoin. We don't want a single one um, to hold super majority of supply. That becomes a potential problem. We don't want 20, 30 different ones that are super fragmented in liquidity, because you can't run some of these vault trades or issue convertible or preferred shares on very small DATs. And then I think what we also don't want is, we don't want the quote unquote canonical foundation labs to be in competing forces with these for-profit DATs. I think the best outcome is for us to all work together as different hubs of a loosely connecting, semi-decentralized um, force, instead of like, both end of the spectrum is not good. If you have just subsidiaries, that's bad. So some of the DATs I know, like for let's say top 20 top 20 tokens, some of the original maybe labs or foundation presidents are coming out to work on DATs. I think that's fine if you're smaller. I don't think Solana should be doing that. Like Lily should not come out and run a DAT. That's one end of the spectrum. The other end of the spectrum is Solana Foundation or ecosystem does nothing, completely ignores it or rejects it. I think that's pretty bad too, because we are simply rejecting the lower cost of capital. And we can talk about the convergence of like TradFi, DeFi afterwards.
Okay, so a few things to dig into there. I guess just first of all, on this point of I think in your article you phrase it as like a for-profit Solana foundation. I just struggle to maybe see how this doesn't become competitive in some way, where this for-profit company whose central value is not to be aligned with Solana, it's to return value to its shareholders, may eventually come to be in conflict in some way with the Solana Foundation, which has maybe it's a nonprofit. It is it has larger, broader goals to bring about the long-term flourishing of the Solana ecosystem, and those sorts of things. So which, like, you could say maybe things like decentralization don't necessarily return value to shareholders. So do you not foresee in a world where the DATs look this way, that you have sort of the Solana Foundation and Solana DATs, and they're working against each other, and it just becomes a toxic, bad environment?
I think that the most acute one we've already seen is the SIMD proposal that Multicoin put out that was controversial within the community. That's an example where a for-profit entity owns a very high stake in the ecosystem, and they have a different view of what is long-term beneficial. In terms of, I mean, the difference is, that's like, you want good teams to run these things, because they are management teams and they're professional asset managers around for the next like 10 years or longer. Like some of these contracts I think are even over 10 years for the asset manager. So the people who are running this fully expect this thing to be around for over 10 years. Therefore, if you're very highly extractive of the community, it actually hurts you, because Sol, unlike digital gold, it's not digital gold. It's not a scarce collectible or commodity. It's a, to me, it's an infra um, ownership and stake in an infrastructure that powers internet capital markets. And in order for the underlying infra asset to increase in value, the ecosystem GDP and economy has to grow. So even if you, in the most bearish case, you have some of these ecosystem companies that may be for profit in a way that is highly opinionated, I think it could increase competition. For example, uh, let's say a Block Daemon or Galaxy or Coinbase decide to run sold validators, and they have, or like Finance. Like funny example, probably not going to happen. Binance is like, I'm going to run a Sol DAT, and I have a bunch of Sol staked, and I will make every single user of Binance stake to my Sol validator, and make an LSC and make a DEX, and so on and so forth. Could that hurt the ecosystem? I think in the short run, it will disrupt the landscape, but it doesn't necessarily hurt the ecosystem because you increase the ecosystem's GDP. Um, the decentralization point of view, maybe I have the more practical answer to this, but I think early days I was like super bought into decentralization. But once I saw this cycle was when like previously unimaginable things were being done on chain, like unspeakable crimes. Is a funny way to put it, because like the really OG DeFi users would look at Athena or Sky or Maple and be like, this is this is like extremely centralized. There's so many off-chain components. But I think this is where it's going. And I'm fine with it. I think it's actually a good thing, because you're taking like the asset layer out, the logic of the asset logic, and the application layer will have to be decoupled, because there's not enough intrinsic high quality assets on chain. Like we can't just create assets from thin air, even if like Bitcoin's been wildly successful, but you can't create like 10 Bitcoins. So in the end, you have to have real world assets. You have to have um, liquidity layers that are higher performance. Generally, that means like more centralizing forces, like the centralized exchanges. You kind of have to have a lot of these. You can still maintain the on-chain settlement ledger. You can maintain some of the on-chain asset settlement components. But with all that, the ecosystem, the entire industry is going towards converging and crashing into is not the right word. It's going in. It's like getting deeper and deeper entangled with TradFi, and eventually, I think it will just become finance. It's like different axes of finance. You have different geographies, you have different asset classes. Now you have like this new axis or this new type of thing called blockchain based finance, but eventually it becomes all the same. So under this broader landscape, that's make a lot of sense, because it funnels capital both ways.
Okay, I have a bit more pushback to this, but I don't want to bury the lead too much just as we're going through kind of the Solana DAT question. So I did want to ask, I think a lot of people look at the Solana DAT landscape, and the DATs that do exist just have not been breakout successes. Upexi is the largest again, and it's the 10th largest by market cap. And of the ones that are out there, there's Upexi, there's DeFi Dev Corp, there's Sol Strategies, although it's not yet US listed. None of them really have the equivalent of a Michael Saylor on Solana or a Tom Lee on Ethereum now, which is, I guess, a thing of the last few weeks that he's really become the avatar for that ecosystem. You mentioned that Lily should not be running a Solana DAT in your view. Joe Lubin, one of the co-founders of Ethereum, is running a Solana DAT. He's obviously not currently at the Ethereum Foundation, but I don't know. It's a tricky question. Joe McCann was going to run a Solana DAT, and as we reported here at Blockworks, that deal ended up falling through. And my understanding is that he's not going to be involved in that project if they make another go at going public with it. So, with kind of what's on the table now, who should be the Michael Saylor of Solana?
Spicy questions. Uh, I think there are a couple of candidates. I would say the multi-coin team could really be one. Potentially Galaxy, who's had a lot of stake. I don't know anybody from there specifically off the top of my head that would be the quote unquote spokesperson, but they do have a lot of stake. post FTX, and that got them more involved in the Solana ecosystem. I think who else is there? I was searching for somebody with more hedge fund or asset management experience. I don't think we've kind of found that person yet as an ecosystem. Like I know many different DATs are searching for this one like archetype person, aka the Tom Lee of Solana. Um, I think Kyle Osmani and his team um, could be great. But if we were to find somebody that Wall Street buys, I don't think that person is highly visible in the ecosystem yet. Maybe they've been a long time um, bull or investor in the ecosystem, but they're at least not visible and out there already making a career on Solana. I think it's a good question why Lily shouldn't be, because I worked with her while I was at Foundation. We've actually had this
And
discussion.
I should. Lily Liu is the president of the Solana
Oh, yeah.
Foundation. We should just add that context for people who aren't aware.
Yeah. So, and Lily has a background in private equity. So she was at KKR before. She was at McKinsey, and she's very well regarded, both in the TradFi and also in the crypto ecosystem. Therefore, she's the perfect candidate, and I'm sure she's been tapped many times to go do that. The reason being, the reason why I think it's better, at least this year, for her to stay at the foundation is because there's a ton of initiatives that the foundation is working on. Um, and she's like the de facto spokesperson and leader for foundation now. For her to leave, it might derail or it might like put blockers in where some of the foundation only initiatives are going. Now that line is blurring a bit. Like one example is I think we were pretty active in ADGM, like Dan Albert, who's the executive director of Foundation, Lily, also president. They were going to Abu Dhabi a lot in 2024. And now there's more activity there. We're even hosting Breakpoint there. Theoretically, in regional DAT could do a lot of the same things, theoretically. But the initiative is already ongoing, and there's many like country, regional um, progress that's being made. I think if midway she leaves, it could be a distraction or disruption. But longer term, I think she would be an excellent candidate for that.
You know who wrote a book about Solana, I believe, this year is Anthony Scaramucci, the ex Trump press secretary for 9 days or whatever. The mooch. The mooch makes a lot of sense as I sit here and think about it. But
Actually, yes.
because I think
Yeah.
whoever this person would be would not be the first person CT would think of. I would say that confidently.
Correct. I have thought of him before. Um, I did a little bit of research. I think he's pretty vocal about speaking up against Trump. So in this administration, I'm not sure he would be the perfect candidate because, um, I mean, you're a journalist, with the um, how like Solana, I think has been very neutral. We've always tried to stay just in our technologist area. But when you're touching DATs and you're touching like big Wall Street capital, you inevitably run into a little bit of the politics side of things, and you just want to be really careful with how you position yourself, how you position the entity and the person um, to be able to survive and thrive in different environments.
Yeah, that makes sense. I'm curious to ask maybe to just get into a couple of the specifics of your more than DAT, which is this company would presumably do more than just buy Solana. It would, you know, convert its SOL into LSTs and then use them in DeFi and then inject liquidity that way. Maybe you run a stablecoin company. Maybe there's some stablecoin connection here. So what could because I think one of the real fair criticisms of these companies is that traditionally companies are valued because they do stuff, and a company that buys crypto, I think to most people is not really providing that valuable of a service. people that are hugely into this world would disagree with me. But that sounds a little more like a company that is doing stuff. So maybe talk about the stuff that this theoretical Solana DAT could do.
Yeah, agreed on having to do stuff. I would say Bitcoin, that just a side note, Bitcoin actually pivoted. They were peer-to-peer money. They did not find product market fit. They pivoted into digital gold and they found product market fit. Well, a digital gold company just needs to mine or hold gold. And that's what those DATs do, or like mining companies do. Sol and ETH are not that. So there's actually so many things you can do with it. Like the entire ecosystem has many different subcategories. Most of the DATs now on the market, a lot of them emphasize validator level, infra level applications, or assets and operations. I think that's a great place to start. Personally, I've been deeper in the application on top of the infra level, and I think that the potential there is huge. Um, a couple of things one could do, and I hope they will, these stats will adopt them. The easiest being deploying your quote unquote AUM, or I guess uh, your treasury into DeFi, and you can do that. There are actually safer ways to do that than what many institutional investors think. Like institutional investors somehow are allergic to smart contracts, but they miss the point that staking is like built into the smart contract, or some of these things are so significant that the likelihood of like a Lido, Jito, or Marinade getting hacked is so extremely low because it would take the whole chain down. So I think putting it into LSTs, putting it into, while potentially running like delta neutral funding rate trades at certain points in time where you don't want to be 100% or 200% exposed to the asset because it's cyclical, um, taking it slightly more active management. Because why not? If you want super passive management, you should buy the ETF. You should not buy the DAT. You're buying the DAT, you're paying like extra fees. And the team, because the team has active things that they can do. So I fully believe that at some point, the delta exposure should be managed. Furthermore, I think there are on-chain tools or on-chain DeFi protocols that help in a very capital efficient way give you exposure to levered SOL, or levered SOL, and you can use the extra cash to lend to deposit into like a Perana vault or some other vaults, and earn extra yield. So now you basically split $100 of what otherwise you would put into the SOL. You can split it into like levered SOL and then into stablecoin exposure and earn yield both ways. Um, I think the other point I wanted to make in the DAT is don't just hold SOL. Sure, institutional investors now they're at the understanding level of barely getting past comfort zone of buying ETH, and they're like, okay, what is I feel maybe comfortable like allocating to Solana. But the key insight here is like, in order for Sol to increase in value, you need the on-chain protocol equity tokens, assets to increase in value too. Like if I look at number of $1 billion market cap tokens on Solana versus ETH, like the DeFi protocols or the whatever other whether it's DeFi or DePIN or some of the other verticals, I think it's in our interest to help propel some of these protocols forward and therefore their assets forward. And holding a Solana index in close collaboration with these protocols will be beneficial. And some of these, like for the audience that are not familiar, oftentimes you can purchase large amounts or sizable amounts of tokens from Foundation at a discount in exchange for a lockup. And DATs are like a perfect vehicle to do this, because your mandate is not to return to investors cash at the end of your fund. It's a permanent capital vehicle. So I think if the management teams are smart, are strategic in acquiring these assets, especially during bear markets, I think that it's going to be a lot of pressure because everyone will ask, why are you buying this like shitcoin? But it will return. I believe it will return well if you're working closely with the actual team that's continuously developing products.
Incubated by Polygon and GSR, Katana is something different, a purpose-built DeFi chain that's focused on giving the best experience possible. It does this by sustainably generating deep liquidity and sustainable, real yield. Katana is built from the ground up, with DeFi mechanics to keep your bags from just sitting idle. All you need to do is use your favorite protocol, and Katana mechanisms do the rest of the work for you. Katana is launching with a notable ecosystem of primitives, assets, and partners including Morpho, Sushi, Lombard, Chainlink, and Yearn. Katana is a DeFi-first chain, built for deep liquidity and real yield, by redirecting chain revenue back to active DeFi users. The 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click, and start earning immediately on your ETH, BTC, USD, and more. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. As far as like buying ecosystem tokens, I wonder if that's the type of thing that just doesn't translate, because Bitcoin has a great story. It has seen unbelievable returns. It's very popular. The recent Ethereum DAT trend, a bit more surprising, but also makes sense. Ethereum is, one of the oldest cryptos. It has kind of this storied history as well. If you look at a lot of ecosystem tokens in any ecosystem, they mostly go to zero over a long time horizon, or they see like terrible price action. And I just wonder if that story is too complicated / risky for investors to want to undertake. Like I think it's sort of the way things currently go. Even if you want to talk about altcoins, it'll be like, hey, we launched a hyperliquid treasury and we're going to buy this much hyperliquid, and then investors will value it at 1.3x that amount, and it's that simple. But if you then get into this kind of complex valuation involving all these locked Solana ecosystem tokens I'm going to buy, like, do you kind of lose the thing that's making this fragile dance keep going with DATs right now?
Yeah, I think it takes a while to get to that point. And I'm far more DeFi and crypto native than majority of the investors, so that is naturally my preference, and I see a long term potential to supporting some of those teams. Um, Two answers to that. One is I'm advocating some of the DAT teams to acquire those tokens via usage. So instead of outright purchasing them, some of them are running continuous liquidity mining incentives. As a DAT, you don't need to sell those assets, but if you're LPing or if into Radium, or if you're using Drift, or um, using some of the other protocols, you're naturally getting token exposure, which is awesome. And that's a benefit that comes with using DeFi versus like using a centralized exchange to execute your trades, or using like a market maker. So that's one, you don't necessarily have to buy them. I think two is the difference is previously a lot of these tokens go to zero because the team stopped working on it. And I think that's still the case for a lot of teams. They TG and then sort of like quiet quit. But that's not true for a lot of the top tier teams. Like you see Aave still building here. Morpho is probably going to be around for a very long time. I think the same is true for some of the top teams on Solana. I believe they will be around, and some of the decentralizing or succession. So some of these teams, you start seeing like what traditional, what like public company corporate governance looks like. It's a healthy succession of leadership. And sure, the original founder maybe decides to step back or retire, but you're seeing new professional management teams step up. And when you see that, and you see consistent growth, revenue, user base, that's when I think the tokens maintain value, because I'm not saying they're equity or securities. They're a different form of exposure to the protocol's growth. And as long as the protocol is still growing, uh, I think people will start to be able to underwrite them. And I'm already seeing that with liquid funds. Like previously, liquid funds, they didn't exist. And now 2025, I'm seeing actually more liquid funds than traditional venture.
And then I guess I'd like to just take a step back and you mentioned that like in conversations you've had with maybe the foundation or people, there's this sense that you don't want to get into this sort of hyper capitalist game that is DATS, where there's a lot of this financial engineering and sometimes some kind of hand wavy ways of saying, hey, we don't exactly know why this trade is working, but it's working. And so we're going to keep doing it. And I just want to like engage with those doubts, I guess, a little bit, because I think that, Ethereum nearly crossed its all-time high on the back largely of, what seems like buying coming from these digital asset treasury companies, which is like great. I'm not going to come and say that like this is immoral that Ethereum's price went up, but I don't think it's necessarily the story that Ethereum has told about itself for a long time, that Wall Street is going to start buying ETH because this weird trade is working in the summer of 2025. And you'll hear like lots of sort of over explained reasons for why Tom Lee and the rest are really interested in Ethereum on Wall Street, because it's going to be the global financial settlement layer or whatever. But I think it's really much more simple than that. And it's that this is a profitable trade. And so people are going to make it. We know that a lot of hedge funds are just trading the volatility in these things. They may not care about the underlying Ethereum or Bitcoin. And so there's real, fair concerns to be had. Now, if you've bet against these DATs, you've been wrong so far. And so that's worth noting. But, they're companies that buy crypto and then the market values them at more than the amount of crypto they hold. And to me, at a first principles level, that just doesn't seem very sustainable. So I guess like, is there a world where it's actually a good thing that, Solana's DATs don't get huge? Or is like there a path dependency that's being created where if Ethereum plays the DAT game and Solana doesn't, then Ethereum captures Wall Street's attention and has an advantage in building actually useful DeFi stuff down the line?
Yeah, great question. I think you pointed out the skepticism a lot of core members of the ecosystem had and maybe still have. I'm skeptical of the hype continuing past 2026, but structurally, I see it as it was a 0 to 1 moment where you went from not having the trade to having the trade. It's similar to LSTs. Like staking was a way to secure the network, but also like frankly, you don't want people to sell your tokens. And then some guy showed up and was like, "Yeah, I can just tokenize that, and now you can trade it." That's a moment you can't go back to. You can't go back to only native staking. Similarly, I think for DATs, you cannot go back to a no DAT, simple, happy, naive time. It's just a thing that's going to be there, and you have to accept it. Some people might not want to embrace it because of various risks. Like one is I think some of them will blow up, some of them will shut down, some of them will get acquired, maybe like a hostile takeover even. Those are all things that will happen. Um, and we'll go through a pretty stressed period of time at some point with over leverage. But the ones that are able to correctly manage this exposure and use in the end, they're financial instruments. DeFi's created certain financial instruments, but more importantly, DeFi's created a faster way of executing financial instruments. TradFi has more engineering done, and a lot of these don't translate yet. They don't exist on chain yet at scale. That instruments and the things that come with that peripheral, um, like a SPAC, reverse takeover, at the money offering, or the convertible no raises. Those things don't really exist on chain. So once people wake up to have access to that, I think those are tools that can help increase. Those are tools that converge the cost of capital and the yield curve. So on one hand, I see cost of capital converging. On the other hand, I also see yield compression. That's what DATs are doing. They basically open the floodgates of like capital flowing both ways. Yeah. So during this time, it kind of like DeFi summer. During that time, you're gonna have a lot of rugs. You're gonna have like a bunch of people make a lot of money. But it will break. Some will break. Some will do really well. Um, I think the MNAV coming down is natural. Like if we see some of these, let's say, hype industries or hype trades throughout the years, you often see like super hype, overhyped, and then it compresses, gets oversold, and eventually reaches some level of temporary equilibrium. So I think it might happen that way. Um, but I think it will always have a nav over just ETFs or like off-chain non-traded fund, just because by nature of the vehicle being attractive. So I think there's inherent value to having that vehicle versus not. Hence that premium will always be there, albeit becoming smaller. And then the differentiation becomes who can do the coolest thing. And whether that's like you have the absolute coolest RPC or validator service, or you run the most like the best RWA tokenization, or you have like the best regional royal family connection, or whatever it is, you need to like these stats need to differentiate. And then that value becomes that investors will assign higher value to that over time.
But also in the short term, a lot of the ways that the DAT game is won and lost is based on who can go on CNBC and tell the best story about the asset, right? And one of the sort of skeletons in the closet, I guess, that's reared its head for Solana again is this association with Memecoins, where I think people have started asking again, hey, how does Solana shake this association? Where when maybe a less in the weeds Wall Street person looks at Solana, they say, okay, I last heard about that when Trump launched his meme coin on Solana, and that was the big spike in price on the network. And this is just an unserious chain where for meme coins, whereas Ethereum, that's where Robinhood launched its L2, which we can get into, how much of that value will accrue to ETH. But either way, Ethereum is a more serious chain. It owns the stablecoin narrative. It's where, institutions are going to settle financial flows, whatever. Like, so just whether or not this Solana reputation is earned, I guess, how does it go about changing that story?
One way I suggested to them to frame it is Solana is a higher performance infrastructure, and therefore more of the consumer applications at higher volume will go through Solana. That is an addition, not a subtraction, to being able to sustain and safely securely record any amounts of assets on the ledger. So it just proves that the ledger is performing. It says nothing about the ledger being insecure. It just so happens that because it is newer and more consumer friendly from a user experience perspective, some of these applications took off on Solana when equally similar applications were being built on Base and Ethereum and so on and so forth, but the users did not go there. So if I may flip it, I actually think it's a confirmation that Solana is a good UX chain that has real users. In the end, the internet started with maybe this is too far, but the internet started with porn and that's a lot of things. I think on-chain speculation, and in the end, it's like on-chain, online kind of gambling. Maybe it's seen as unsightly in the beginning or not attractive as a place to store real assets. But as we've seen with internet and video streaming, in the end, it becomes highly scalable and used for quote unquote proper use cases. I think the meme coin, yeah, frankly, the meme coin identity is hard to shed, and one that within the ecosystem we don't ascribe that much to. Like, there's maybe a lot of people first came from, like, even in my hiring process, a number of devs came from ETH to Solana because of meme coins, but they stayed and now they're interviewing for Solana companies. So the overall population, the on-chain population and the GDP is accruing to non-meme financial use cases. And then the other thing is that it proves the velocity of mm, I think it proves users' interest in speculation and trading. And that translates to companies launching equity or token on Solana that are pretty much Web 2, Web 2.5 companies. Examples are like Helium, Grass, Render. They're, they could be normal companies, but they chose to use Solana. And some of them even migrated from other chains to Solana. And that's because that's where the traders are. That's where the users, the people who want to trade are. And that becomes like, if Solana's trading volume can continue to grow, whatever asset that is, consistently, I think it's very bullish signal.
That's a good overview. And maybe just to close then, like, I want to merge these two sides maybe. And so just explain to me kind of as succinctly as you can, like if you're making like a pitch to a Wall Street guy, I don't know. How does the DAT vision and the internet capital markets vision come together? Like, why are these complementary and not sort of mutually exclusive things?
DATs are an excellent permanent capital vehicle for deploying assets and liquidity to internet capital markets in a way that would fuel the growth of the application layer, further cementing depth of liquidity, therefore making it a more attractive venue for people to trade, to invest and trade assets. And eventually the hope is, the goal is, because as a permissionless ledger, Solana is naturally a better alternative to some of the traditional legacy ledgers, off the legacy off-chain ledgers, for recording the movement of assets. And that's like the key to financial activity, is how do you record and move these assets with, over time, more logic and conditions. And much of that in TradFi, we've built it out in the last like 150, 200 years, using heavy legal structuring. And if you like try to issue a convertible note or something, it's like dozens of, like a ton of legal fees. But the potential on chain is you can do all those things without paying lawyers or bankers, to anyone, anywhere, anytime. And that's the beauty of internet capital markets.
Well said. Anna, thank you for taking the time to chat. I think that it's been a wide-ranging conversation, and my spidey senses are tingling that we're going to see more Solana DATs come to market. I think that it's a current opportunity that I'm certain investors are looking at, as far as the current lack of success of Solana DATs. And so hopefully this is helpful to listeners just as we start to see more of these things come to market. Anna, thanks so much for coming on Lightspeed. If you enjoyed this episode, we'd love if you gave us a 5-star rating or a thumbs up wherever you get your podcasts. If you enjoyed this episode, please share it with a friend, and we'll see you all again very soon.